Welcome, ladies and gentlemen, Precious Metal Summit 2018, and now we are getting in the evening of the first day, and with me here is now Geodrill, a complete different company than we have interviewed before, because now we will talk with the drillers, with the one of the leading companies in the world, having drill rigs installed, most of them, of course, in Africa. And we have Dave Harper here. He's not only the founder, but he's also the CEO and the president of the company. Dave, good afternoon.
Good afternoon.
Yeah, great to have you here, Geodrill. Maybe you can give us a little bit of a short overview of what your company is doing.
So, Geodrill, exploration drillers in West Africa. We operate in a tight geographical footprint in West Africa, namely Ghana, Burkina Faso, Mali and Ivory Coast, for those that know West Africa. I founded this company 20 years ago in 1998 with one rig and one contract. And throughout the years, we've grown to become, I'd have to say, the most recognised driller in West Africa. Today, we're listed on Toronto stock market. We have been since 2010, so for 8 years. And we are operating 62 rigs. We are drilling just over 1 million metres per year, and we have done that for the last 2 or 3 years. We employ just over 1,000 people. And we are working for some of the biggest names in West Africa, namely Newmont Mining, Newcrest Mining, Resolute Mining, Endeavour, Semafo, and many more names.
Yeah, so the real big boys, of course. So what did you bring to Africa? I mean, that sounds to me like a great business idea. Because if you say 20 years ago and then moving especially also into Africa, how did you come on that?
So the company was predicated. I founded the company, as I mentioned, it was predicated on the simple belief that West Africa needed a best-in-class driller. I worked in my previous life before Geodrill for a corporate driller, and like most corporate drillers, they for many years have seen Africa as a place where you put your, let's say, depreciation assets that might have already worked for some period of time in North America or Australia or somewhere. And so how we looked at this was a little differently. We thought, well, you know, if we saw a huge opportunity in West Africa. We believe it's hugely underexplored. And so how we approached it is as it is our primary market, and so we wanted to put our best assets. So we put tier one assets into a market in which our competitors were basically sending their old depreciated rigs. So it's a little bit like, you know, fighting bows and arrows when we talk about our competitors with Gatling guns, so to speak.
Fantastic. So you said 1,000 people are working for you. Can you maybe give us an idea how your business is running? I mean, we understand you have 62 rigs, you have 1,000 people working there. So let's say a company like Newmont Mining picks up the phone, calls you and says, hey, listen, Dave, we need 10 rigs into Burkina Faso, whatever, or Ghana, and then you provide the complete rigs with the drill team. They book it for a certain amount of time. They rent it on a daily basis or monthly basis, like an oil platform, for example. It's a daily fee, for example. Yeah, how does that work? Can you maybe give us a bit of an insight in your business?
Yeah, so mineral drilling is a little different to oil field drilling. Oil field drilling is on the commercial side is usually done on a day rate and a meter rate business. Most drilling programs are done on meter rate. So drillers are paid by the meter. So understand the motivation for any driller in operating in the drilling industry is to achieve the highest productivity in the shortest possible time with the least amount of rigs.
Absolutely.
Does that make sense? And that basically transcends into a more efficient program operated by less people and just drilled more efficiently in general. And something that's very, very important today is health and safety. And so with health and safety, no mine owner is going to want a lot more people running around operating at their mine than they have to. And so it's very, very important and by having best-in-class rigs that are the most modern, with that modernness, if I can use that term, it's a little bit like your iPhone or your mobile phone or your laptop computer. This year's model is going to be a lot faster than something that might be 10 or 15 years old. And that is what we bring to the table. So the other side of it is, beyond being paid on competitive bid by the meter, what Geodrill can provide our customers with is a complete package. So the phone or the email comes in, we get invited to tender, tender goes out, we have a very high strike rate when it comes from bid to win. The rig mobilises and the customer mobilises their geologist or the geological team. We take care of the rest. So aside the fact that our customer would provide us with access to drilling, push our drill sites and so on and so forth, from there pretty much we take over. We look after accommodation, we look after fuel, we look after the support for the rig. Something we didn't actually mention in the introduction is the fact that, these high performance rigs that we have, think of it a little bit like Formula One. We're running around a Formula One track and the cars are going very, very quick. So that requires a lot of pit stops. Rigs need maintenance. Rig needs maintenance. And with the maintenance on rigs, most of our competitors approach drilling a little bit like taking the kids on holidays and going camping, and doing it out of a tent. You can do it for a couple of weeks and that's a whole lot of fun. But after a couple of weeks, you're ready, to move back home. What we've done a little differently is we've built a network of maintenance facilities, starting in Ghana, which is the hub of our operations, and in Kumasi, in Ghana, we have a 30-acre facility, and within that facility, we maintain our rigs. We actually even build rigs. The only drilling company in West Africa that actually builds its own drilling rigs, and that's something that we've undertaken only just recently, and it's going very, very well. We make our own drilling rods. So, it's very, very important in difficult times. So we've just come through a 4-year down cycle. It's very, very important to be able to operate and reduce our operating costs. And so we managed to do this by having built this vertical integration model. And beyond Kumasi, we've also got support facilities in Ivory Coast, in Bouaké, in Burkina Faso, we have in Ouagadougou, and we're just building another support facility in Bamako.
Fantastic. Wow, that sounds like a fantastic network plan. As you said, to save costs is super important. I mean, for everybody running a company, but especially in those hard times, what we saw the last years with exploration, it was really not easy for the companies, but also for you guys. So you said 1 million meters you are drilling, and correct me if I'm wrong, but you're doing like over 100 million in revenues, right?
Last year we did 107 million Canadian.
Exactly. So that's like $100 per meter.
I guess it works out to something like that, yeah.
And you had a nice EBITDA of over $20 million.
We made 20 million in Canadian.
So let's talk about valuations, because this is finally what our viewers also want to know, because you are a listed company.
Yes.
Yeah. So what is, let's say, the company value per stock, and what is the stock traded at now?
So we've got a hard book value. We've got about, in total assets, in USD, 60 million total assets. And we have a market valuation about 75% under that. So we're trading at about 75% of book, and we're not even trading at a year's revenue. Crazy. It is a crazy situation, and but look, it is what the market is. It's not like Geodrill is an isolated situation. Most of the drilling companies at the moment are trading well under book. The difference with Geodrill is it is a profitable drilling company, and it has been a profitable drilling company for quite some time. At the last quarter, Q3, we notched up our 17th consecutive EBITDA positive quarter. Wow. So, whilst most of our competitors, being best in class has allowed us to keep busy through the down cycle. There's always
It speaks for you, I would say.
well, there's always we always, we say, we stay busier longer and we get busier sooner through the cycles. And being best in class has allowed us to do that. Yeah. The cycles, this market for drilling habitually comes and goes. Every 4 years, there's a down cycle. You can count on it. There'll be 4 years of good and there'll be 4 years of tough times. And so, you've got to try and plan for these things. At the moment, we're very, very busy. What we started becoming, we were cash positive, operationally cash positive for the last couple of years. And what we've done with those funds is we've put it back into.
So you're modernized.
Well, not just modernised. We've upsized the fleet. We've got so from about 2 years back, when things started to improve for us, we saw that the rest of the industry wasn't quite ready yet, and so regardless of what we did, the market wasn't going to give us any value. So we took the diligent move of making good on some distressed assets that have been in the with competitors failing and some customers deciding they don't want to do their own drilling anymore. And so we have upsized our rig from 37 rigs to what is today 62 rigs, and that's essentially been done with free cash flow. At the same time as we've done that, we've actually paid down our what was net debt to a situation where we're actually net cash. So we're really, really focused on balance.
So you're debt free now?
We're net cash. Well, we have debt, but we have cash as well. So we're actually net cash. And we've been net cash for some time, but each and every time cash becomes available, it goes straight back into assets because the industry's not there yet. The market's not going to give us any value for the fact that we're banging it out of the park. So we might as well just keep investing in the business. And so how we do that and how we reward shareholders is the cash flow that we generate from operations goes back into CapEx. Last year, by example, we generated in operating cash flow $6.1 million. We spent 10.5. So we were 4.5 million negative. Okay, so that was a conscious decision to do that. It was a conscious decision to do that because the market's not giving us any value for the moment anyway, so we might as well prepare for what we believe is the next upcycle.
So it was a real investment for the future.
Totally. We're investing in our future. So, it would have been, it's been difficult not to say, well, why didn't we pay dividends? Well, it'd be lovely to pay a dividend, but when you can buy distressed assets at 20 cents in the dollar,
much better.
That's much better and prepare for the future.
That's right. Well, Dave, thank you very much. It was a great insight into how the drilling really works here in the world of mining. And I would say keep it going. And probably from 2019 onwards, it looks a bit better, I would say, if the exploration is coming back. And we need much more exploration because this world needs much, much more commodities and resources.
It does. And I have one final thing to say.
Yes, please.
If you want elephants, you're going to find them in Africa.
That's right. That's for sure. Thank you very much, Dave. Fantastic.
My pleasure.
Ladies and gentlemen, there was Dave Harbour, the president and CEO of Geodrill, and actually he's also the founder of the company. And you heard it, the company has had fantastic 20-year development. 62 rigs are really running now. They're drilling over 1 million meters per year, having revenues of over 100 million per annum, and they're making money. 17 quarters consecutive with positive cash flow. That speaks for itself. And even in the bad times, the guys are making money. They are fully booked. They're heavy in the business. So I suggest check out the company because it's heavily undervalued. Thanks for watching us. Bye-bye from Zurich.